Welcome to the Real Estate Jam session. Today we're going to talk about real estate syndications, what you should know when investing in a real estate syndication. It's a great topic. I know a lot of you have reached out to me and asked about what do I do? How can I get started investing? And this is a path you might want to consider. And for that, I've asked George Pino to come in. George is the CEO of Commercial Brokers International in Los Angeles. He is my business partner. We've done a good number of syndications around the country. We've got a lot of experience in this, but I'm always afraid I'm going to forget something. So I asked George to come in with us and cover my back. So George, thank you for coming in today.
Thanks for having me over again.
You know, these syndications, I think, for a new investor, it's really a good path for them to look at. But as you can imagine, there's going to be lots of questions. I think, you know, first and foremost, is there an asset class that you like to see a new investor to get into when they're looking at syndications?
Well, when it comes to choosing the asset class, because you know the beautiful part about a syndication and one of the benefits is that you can syndicate just about any type of property. Right. That being said, you typically don't see syndications with single-family homes because the price points are lower. Because the main benefit of a syndication is it allows investors to invest in larger properties that they couldn't afford to purchase on their own. Diversifies their risks out with other investors and whatnot. So
I've seen them in bulk
sales with bulk for bulk housing, single family housing, things like that. But if I were an investor and I'm looking to start investing in real estate and I don't have the funds to purchase my own property, syndications allow quite a bit of knowledge and also ability to get into it. So I would choose an asset class that I have a passion about, that I want experience about, so I can learn about it and learn kind of what the syndicator does or what their plans are and how I can then apply that to my own businesses and acquisitions in the future when I do have enough money to buy my own properties.
Yes, and risk is another thing. You know, you really have to assess what is your risk level. I mean, if you're going to invest in a real estate investment, in a syndication that is buying in high risk asset class, you really got to think, can I really afford to lose this money? Now, if you're going to go into somebody that's syndicating triple net deals, you know, less risk. So I think first and foremost, how do I find a good syndication?
You know, how to find one? They're out there, they're all over, especially if you Google them, but the best way is to actually talk to some contacts and get referrals, because I think that's the riskiest portion, is that private syndications, also known as PPMs or private placement memorandums, when they do the syndications, there's a lot of regulations to them, but at the same time just about anybody can create one. So the last thing you want to do is go into a syndication with a sponsor that doesn't have a whole lot of experience. And I think if that's the case, then that might be an issue where the biggest risk is who the actual sponsor is. So a good referral with past history, but more importantly, also, you know, here's a easy gut check for me. If the returns seem too good to be true, there's probably a lot of risk involved.
Yeah.
And you know, there'll be carve-outs in that PPM saying you could lose everything.
Yeah.
So, you know, really when you're looking at it, you're at a sponsorship or a syndication, you want to actually do all your due diligence. You know, not just say, you know, this sponsor has a good track record and this is what they've done, but more importantly, this property that I'm going to be buying into as a limited partner, what are their plans? How are they going to get it to create that value? Is it just a straight cash flow play, or is there a value add that they're going to turn tenants and do CapEx and create value for the property and then sell it? Are they going to sell it in 3 years, 5 years, 7 years? What's the plan, and how's that hold period going to look? That's all a factor of choosing the right sponsor and the right syndication.
Yeah, and I do think you're going to have to reach out, because there are probably platforms out there that will guide you to syndications, but I don't really know of any.
Yeah, no, there's definitely a lot of platforms out there, and there's also even a lot of crowdfunding, you know, which is...
that's the next thing. I want to compare the two.
Yep, it's a form of syndication, but, you know, it's not... well, we can get into that in a second. So when we look at the syndicators and the sponsors, Track records are very important, knowledge base, and the track record can also come not just from the experience in the syndications, but what they've also done with their own investments, what they've also done with other people's, if they're brokerage, because a lot of brokers go into syndications, such as ourselves, and turn that into more of the development side of the company.
Right. Yeah, I do think it's finding the right one is key, and making sure you do the due diligence just like you're buying a property. And the reason I think it can be good for a newer real estate investor is it's less risk than going out and buying your first property. If you go out and get into a syndication, then you'll start receiving all the paperwork. You really get an idea of what's involved, and you'll start receiving the reports from this experienced company. So it can be a really good path for you to take a look at. Now I know you touched on it a second ago, but I want to go back into comparing a syndication to crowdfunding and the differences of the two.
Well, syndications, typically sponsors are going to be like developers or other investors that have experience within that market, and then they do the syndication itself. They typically have tranches of investments that can range from minimum of $25,000, $50,000, $100,000, depending on the price points. The crowdfunding model allows for lower price points, and it's a little bit less regulated than, because it is relatively new.
Sure.
When I say relatively new, it's been around for a few years, probably about 5 or 6 right now, if not a little bit longer. But at the same time, one of the concerns that we have is a lot of times those crowdfunding platforms do not necessarily have the infrastructure for the real estate itself. They're more of a tech or finance driven type of company, as opposed to a real estate developer that knows what to do in a downturn, so to speak.
Right.
In fact, most of these crowdfunding companies that have come about and have been successful, they've been around since the market's gone up since 2008.
Right.
And so all boats rise in a rising tide.
Right.
So they haven't really experienced the downfalls and how to navigate that. So that's a concern I would have.
Don't a lot of crowdfunding companies, the platform, partner with a developer, don't they?
Yes.
Yeah.
A lot of them do. You want to make sure though that the developer that they partnered with, that you vet them out as well though, because one of the key things also to take a look at is how their fee structure is.
Yeah.
A lot of sponsors, they typically don't make the majority of their money until the end of the transaction when they sell, so it's based upon performance. A lot of the crowdfunding models have a lot of upfront fees because they're partnered with other parties, so they have to make sure that they're paid as well. So there's a lot of upfront fees that are front loaded into the investment, and they earn quite a bit at that point, so they're less motivated to make sure that the property performs as it does or expected to in the prospectus.
Okay. Now, to be a syndicator, to invest in a syndication, you have to have certain minimum guidelines.
Yes. Well, typically speaking, if you are investing in one, you have to be an accredited investor. A little bit different than the crowdfunding model. You're supposed to be an accredited investor.
Yeah.
But
as syndicator, you have to have at least $250,000 in.
Well, your income levels, it's based upon, you have to have a minimum net worth of at least $1 million, excluding any personal residence. Okay. In addition to that, if you have $350,000, I believe, for a single person a year in income, $500,000 if you're joint.
Okay.
So they have certain guidelines on that to make sure that and the idea is that you're not risking your nest egg in a syndication, because frankly, the biggest risk in a syndication is the control. You don't have the control.
Right.
So.
And then crowdfunding.
Crowdfunding, very similar. They have
they check for a pulse. Yeah, you'll do.
Well, they may have you sign off and check things that you are an accredited investor, that you are aware of the risk that's involved. From what I've seen, most of them don't necessarily go the extra step to verify that what the investor is saying is necessarily true. Okay, and I do know that the government's also looking at a little bit more regulations on the crowdfunding side. They just haven't quite figured out how to do it yet.
A lot of people are looking, I was talking to some people over the last few months, and they're using it as a platform for office buildings, and now they're a very experienced developer, and they're doing crowdfunding on only part of the investment, so like 50% of the investment, and then they're syndicating the rest. So, it's kind of a unique balance that they're doing. So. And they have lead investors themselves, first of all, so it's kind of easy for them to reach out. But it is taking a path that I wasn't expecting it to go with.
No, it's an interesting path. It's going to be interesting to see how the waterfalls change based upon, because typically speaking, if you're syndicating and you're taking in more money, a lot of times those investors may want, since they're funding more of the project, may want a higher return. So when we talk about waterfalls, that's actually meaning the type of returns that are passed through, meaning is maybe the syndications, the people who have invested in the syndication portion, are they going to be considered a Class A? The crowdfunding, maybe a Class B that gets a different return after it hits certain benchmarks. Those are all things to take a look at, but I think that is a little too new right now to really determine how that's going to end up happening or what's going to happen with that.
Okay. Well, George, I did have an idea. I want you to come back and do a video on us about how to become a syndicator. So I think that'll be a good video to have.
Absolutely. No, I think that's actually a lot of people are always looking into that. And we do get questions about that, and there's definitely some things that you want to make sure that you do ahead of time to make sure you have the right resume, make sure you have the right contacts, the funding and paperwork, and the chase money. I mean, that's a big portion. If you're a sponsor, if you're going to be a sponsor,
you're going to give it all away.
You need to have all the
chase money in hand. No, that's just a teaser.
That's a teaser.
That's really just scratching the surface.
All right, well, you've got the teaser now, folks. Thank you for coming over, George. Like I said, if you ever want to reach out to George, I'll put his contact information below, or you can reach out to me and I'll put you in direct contact. And thank you for tuning in today. And if you haven't done so, make sure you subscribe, and we'll see you again in a couple days.